Welcome to another edition of the Live Investigator video series. Again, you can always ask questions using the chat screen on the right-hand side of the screen. A little message about that. In addition to asking questions here, you can also email our help desk. help@activeintel.com is the help desk. Today, we're going to start by talking about corporate fraud and embezzlement. It's a very common type of loss that a company would have or a client may have, where if for some reason you have an employee that decides they want to take money from your company or divert inventory or some other type of loss to the company incurs, there's really three ways that hurts a company. First of all is the actual loss to the company of whatever was taken. It could be inventory, it could be money, it could be corporate information such as client records. It could be taking accounts receivable. There could be payroll fraud. There's a lot of different ways this takes shape. The typical type of case is exactly this right here. This is a typical embezzlement case. And this is almost the embezzlement number that we see, just shy of $1 million. Somebody worked in a company, was a trusted employee. It's usually not a new employee. It's usually not somebody who is just random. It's usually a very highly trusted, embedded employee. In this case, they talk about long-time relationships. The article says that Andrew Paul Fleming wasn't just an employee. He was like a family member. We hear this over and over. The longtime employee trusted him. Maybe it was a bookkeeper, maybe an accountant, maybe a sales manager, general manager. The owner of the company was this person's godfather and best friend for 5 decades. It was inconceivable that Fleming would steal nearly $750,000. A fraud so vast it nearly wiped out the business. Not uncommon. What happens is when you have a trusted employee, they are in much better position to steal money from your company in a way that's devastating. And we've talked about the fraud triangle before, but basically what happens is a person cannot and will not commit fraud or embezzlement from your company unless there's 3 factors that are all true. One is they have to have the ability to do it. They have to recognize that ability. Well, most people who are trusted in a company have the ability to take money because you're trusting them. But they usually won't do it unless they have a need to do it, where the need could be some financial impact on their life. Maybe they have other financial problems. Maybe there's a medical problem. Maybe there's a divorce or death in the family, something that is a financial drain. Sometimes the need is simply greed. Sometimes it's just, I want a bigger house. I want a better car, something intrinsic in them. But even with those 2 factors, there's usually almost never a fraud event unless the third part of that fraud triangle, as we call it, comes into play. And that is justification, where they justify the fact that they're going to do it. Again, this guy was friends with the owner for 50 years and his father. What would justify him to do it? Well, sometimes it could be being passed over for promotion. Maybe they found out somebody else makes more money than them. It could be something as simple as a perceived insult. But once that happens, all bets are off. And the person in their mind can take whatever they want from your company without the guilt. And that's usually what keeps most people from stealing, is the guilt or the obligation to the company. In that case, your company's assets and value is at risk. They can steal anything they want. The way to prevent it, as we've talked about before, is even somebody who's trusted, they are verified and validated, double checked. If it's an accountant, you have somebody else go over the books. If it's a sales manager, you have somebody else go over the records. If it's an inventory control, you have a cross check on the inventory control. And you don't have to use it as a question of their integrity. It's good business practice to have verification of numbers, if nothing else, just to make sure that you don't have any opportunities for improvement. Maybe if you have somebody look over the sales numbers, you might be able to make more money. If you have somebody else look over the accounting numbers, you might be able to get a better tax return. It's not an insult. It's kind of like the cliche trust but verify, right? Some larger companies have a policy in their company where an accountant or bookkeeper is required to take a vacation every year. So somebody else looks at, they can't keep things hidden. And many times that's when a fraud is discovered. There's a major case in a town in Illinois where the town manager, the controller, was stealing tens of millions of dollars for 15 years, and it was only found out when she went on vacation and somebody else looked at the books. Another type of corporate fraud, we'll take a look at it here, is something where they're stealing money, not necessarily directly from your company, but from the customers. And this was an insurance agent charged with fraud. And what the insurance agent was doing was taking money from the clients. And that, again, is something that an employee could do. You may not see it missing from your business balance sheet, but your customers sure are going to see it missing. Okay. 3 counts of embezzlement, computer fraud. Basically, what was happening is he was taking customers' insurance premiums, but not sending them to the underlying company, the underwriter of the policy, in which case the customer had no coverage. Right now, there may have been some E&O insurance or something that would kick in at that point. Verifying anything you're counting on for the security of your business is important to maintain the health of your business. If you think you have X amount of dollars in inventory, you want to make sure that you truly have that much in inventory. If you want to make sure you have X amount of dollars in the bank, you want to make sure that your bank statements are accurate. Some companies require that the mail is only opened by the CEO of the company, or at least nobody else exclusively gets the mail. Right? If your bank statements come by mail, if your inventory records come by mail, if your accounts receivable payments come by mail, you want to make sure you're intercepting those so somebody else isn't concealing all of that. Accounts receivable fraud is a common method that's used because if somebody sends you a check to pay a bill, your company invoiced ABC Corporation for $182, they send in a check. If an employee in your company intercepts that check, deposits it in their own bank account, and they clear it off your accounts receivable because they have the ability to clear an AR record, now they're in possession of your company's money. So that's a common thing you want to look at in your company to make sure that your accounts receivable aren't being cleared without funds, a cross-check, going into your bank account. Another form of embezzlement is diversion of inventory. If you have somebody on your loading dock, your materials handling, that have the authority to change inventory records. If you get a shipment of raw materials from a vendor and 1,000 boxes of widgets, if that inventory manager can check in 1,000 but only put 900 boxes on the shelf, now they have 100 boxes of their inventory that they can ship out the back. So a cross check on inventory, because inventory is like cash, right? Those 100 boxes that were lost might as well be money taken from your bank account. Over the last 12, 14 plus years, we've probably looked at 800 or 900 business scenarios where fraud has been suspected. We have yet to find a business that did not have some type of embezzlement going on. Now, sometimes it's very low level, right? I mean, the example that people use a lot is stealing pencils from the supply cabinet. That's not really embezzlement. But if somebody's doing that, the question is, where do they draw their line? If they steal pencils, then they steal maybe a ream of paper, then maybe they steal some toner cartridges. Next thing you know, what's off limits for that person? right? Do they have a debit card where they could put gas in their car? Because they figured, well, I stole $50 worth of toner cartridges, so why not put $50 in my car? Having those good controls keeps people from thinking that it's okay to steal. And you may not think you need to tell people it's okay to steal, but there have been many, many interviews we've conducted over fraudsters and embezzlers that have said, well, I thought it was okay because they never said anything. Now, obviously, they knew that that actually wasn't 100% true, but that was that third leg of the fraud triangle that they used for justification, that they said, well, I think it's okay because no one ever called me out on it. And sometimes a fraudster will figure out that first leg of the fraud triangle accidentally. We had a case, we've talked about it before, where a bookkeeper had a debit card for buying office supplies. If they had to run to Office Max or Staples to buy some paper or whatnot, they had a debit card, a corporate debit card. And one day they went to the gas station to put gas in their car and accidentally used that debit card instead of their own personal credit card to put gas in their car. And they realized it later that, wait a minute, this was not right. And they didn't know what to do. They were afraid. They were scared they're going to get fired. But then nothing happened. Nobody ever checked it. And they realized nobody's checking these. Nobody's looking at that. I'm the bookkeeper. I'm the only one that sees it. So that registered in their mind that they were capable of stealing money and using this card at their convenience. And then later, when this person had a financial problem that happened in their life, they thought, well, maybe this is a solution. But you know what? I'm a good employee. I like working here. I'm not going to harm this company. And then several months later, they found out, as a bookkeeper, they looked at payroll and found out that there was a person in the company that was making vastly more money than them that they thought didn't deserve it. They thought they deserved more money because they were a more important employee that had been working longer at the firm. So that was their third leg of the fraud triangle, to say, I deserve to steal money. And that's when they went ahead and started stealing money. In every case of embezzlement that we've looked at, it would have been very easy to prevent, discover, and retain the lost money by very simple corporate controls. The corporate controls could have been cross-checking bank statements. It could have been cross-checking inventory. It could have been cross-checking accounts receivable, even payroll. One of the methods that some clever managers are using is ghost payroll, where they create an employee. If you have a company with 100, 110 employees, you add one or two fake employees, they get paychecks, and if you sign off on their time, and you have that, especially now with direct deposit, somebody doesn't have to physically pick up a check or have a check mailed to their house. And they just set up direct deposit into bank accounts that they've created for themselves, and it's a form of embezzling from the company. In some cases, it can be done without leaving any apparent tracks, because they set up the payroll. It's not in their name. There's not an address that's connected to them. They just wire transfer the money through payroll for direct deposit. Now, in order to set up that employee, somebody had to make an employee file, make an application or whatever the policy is. But a smart HR person or a person in managerial position knows what it takes to set up a direct deposit. It may not take all those documents. It may only take one document submitted to your payroll company to start the payroll. And knowing how that happens and knowing what that internal mechanism is sometimes allows a fraudster to create an extra income, a no-show employee, a ghost employee for themselves without leaving what they think are tracks. Of course, there are ways to find it out, but they think there are no tracks that can be followed. Another method of embezzlement that unfortunately we see a lot of times in corporations is a ghost vendor. This is not accounts receivable. This is accounts payable, where if a person within a company knows how payables are done, they can submit fake invoices to the accounting department for relatively small amounts of money, $200, $300, $400. They know the threshold to where a accounts payable is audited. It might be $500, it might be $1,000. Anything under that automatically gets paid. So they'll make up a fake invoice. They usually make it up in a name that sounds like a business that is an actual legitimate vendor. So if you buy paint from XYZ Paint Company, you might make up a fake company called XYZ Materials or XYZ Painting instead of XYZ Paint. And you make these invoices and you submit them. The person, whoever's doing the accounts payable, is going to see it. This is legitimate. They sign off on it. They put it into payables. A check goes out, and they'll create a PO box and they'll get these checks and deposit them. So accounts payables fraud is another common method that people use. If you have a company, large or small, be aware that the methods to identify and detect these 4 very common types of embezzlement are very easy to put in place. And you can do this detection without raising awareness to anybody. You don't have to, cast suspicion on employees. You don't have to make a big deal in your workplace that somebody's looking at this. You can do most of this covertly to detect if there are anomalies in your company. And sometimes the client comes to us because they know there's something going wrong. Their KPIs are off. Cost of sale is too high or payroll is too high, and they want to get to the bottom of it. But even if you don't see something proactively, you can do some things to prevent future fraud, but also to detect if any is happening at the moment. And it's important to do that because, and going back to this story here, this company who had this embezzlement of $700,000. Actually, it's the other one. They lost $700,000. Okay, I mean, there's no doubt about it. Here it is. But their biggest loss in most cases is the loss of the person, because that person in your company was a trusted employee. It's probably harder to replace them than it is the $700,000. In fact, here's the owner of the company, the owner, Whitworth, that's his wife, said her husband has had panic attacks since the embezzlement and damaged the future of the business and forced her and her husband to delay retirement. Now, granted, the fraudster was sentenced to 2 years in prison. That doesn't help the company any. And a lot of times the companies don't want to prosecute. It's very hard to determine why you did this, Mr. Fleming. Victim statement. It says here, he devised this scheme to defraud the company by creating fake vendor email accounts, almost like what we just talked about. Created fraudulent invoices in the names of real vendors and then assigned them to the company's project, used fake email to send the payments to his company by PayPal. In all the cases where there's been a major embezzlement discovered in a company, the largest loss to that company was not the money. It was losing the person. So if you can prevent a fraud like this from happening by not allowing the pathway to exist, by not letting the person put their hand in the cookie jar to begin with, most people are good people by nature. But if you don't give them boundaries to continue to be a good person, there may be a set of circumstances in anybody's life, a financial challenge, being mad at your boss, being disappointed with your company, being bored at your job, combine those, that really could make anybody do something wrong in the moment. And then once they do something wrong, now it's a runaway train. Once they've stolen money, they can't put that genie back in the bottle, and they'll keep stealing money. So to preventing it in the first place is a very good way to keep yourself as a business owner from losing the money or the inventory, but also facing having to replace that person. Think of the most key employee in your company, or top 2 or 3 people, key employees. What would it be like having to replace that person? And if somebody said to you, look, you have to either replace that person or lose $100,000, a lot of times people would rather lose the $100,000 because you can replace that more than you can the person. So good financial fraud preventative measures and audits are an excellent way to maintain the health of your company financially, but also culturally, by not allowing that to fester. And think about, if you lose that key person, how does that affect other people in the company? If they have direct reports that report to them, the morale of the company, it can have devastating impacts on the corporate culture. And even clients and vendors who find out about this turmoil in your company can be thrown off and create a domino effect for future business. So if you do have questions about corporate fraud or embezzlement, you can email our help desk, help@activeintel.com. You can also arrange for a consultation at the link at the top of the screen, teleclient.com.